So, hello to you all. Welcome to another video presentation for one tool to rule them all. In this case, I have just released a new update into it, and this update is being made for a probability of a breakout. In this case, we are taking the highs and lows from the previous candle, and based on the beginning of the candle, if it's an initial bearish or a bullish candle, we are going to aim for a probability of the breakout of the previous low or the previous high. So let's take, for example, this scenario right now. So let's say we would be here. We can see that in this case, our for this candle, we can see that the previous high was on the 19,405 and the previous low was on 19,308. So when we initially build the candle, so like for example, if we will go here, we can see that our lows, it would be this one and this one. So in this case, it's telling us that at the beginning of the new candle on the 9, we have a 65% probability to break 19,402 and 27.43 probability that we're going to break the low. And we can see that we broke the high and the low, although right now, honestly, I don't know which one is which. For this one, we will have to go into the, into the smaller time frame, but because I'm using internally already, smaller time frames on the inside, the calculations is being made for the, for the accurate first break of the, first value that was being break. So let's go a little bit more in the past. Let's go, for example, with let's remove this one, remove the drawings. So yeah, look, for example, we can start from here, like for example this one. So we can see right now on this one, our low, it would be this one. So we would want to break the 19,400. So we can see that we break it. In this case, we had a 63.9 probability. Now the next break, it would be for 19,335. Again, we are going to have a 60. In general, the value is between around 65% probability that we are going to break it. And we can see that in this case we didn't. It would be a loss. So it would be from the upper side. So let's remove the drawings. Now, from this scenario, we would have 19,532 and 19,378. Let's see which one is going to be break first. So we can see that in this case we broke none of them. So this one as well is going to count as a loss. We're going to go a little bit lower as well again. Now, because we have a bull candle, now we're going to focus on the on the high. So the high now is going to have the higher probability. The high is going to be 65% and the low is going to be 25%. And we can see that the values were changed. However, again, we are not taking none of them. We are not breaking none of them. So this is kind of like one of those 5%, 10% situation. And then again, we can see that, for example, in this case, because the previous one, so here, we can see that the previous one was a bearish candle. So now, because we are having a bearish candle, this part from here, this one is going to be 65% and this one is going to be 25%. So if we are going to calculate, we can see that once we are going to move the new candle, we can see that the values have been changed, because actually at the beginning of this candle, the previous one was a red one, so we would have a higher probability to break the low than the high, and when we have a bull candle, there is a higher probability to break the high than the low candle. I hope this one got specified. Now, with this being said, like for example, now the next one, the 65% is going to be on the 18,670, and this one is going to be for here, and we can see again, we are close to it. We are again in the, I would say, in the 5 to 10% category. Then again, we are going to move. And in this situation, the high part So the 18,836 is going to be our 65% probability. So let's see, and we can see that we break it. So yeah, that's more or less how it works, the basic of this strategy. The good thing about it is that you can use it with any time frame. You can see, for example, 15 seconds. So you know, we can see the 15 seconds, and it's going to show you which one is break and which one is doesn't. So I believe combined together, you know, with the manual trading already, you know, with the one tool, I believe it's going to be a very, very powerful tool, especially like I said, if you want to trade momentums, or if you want to trade breakouts, you know. And this in general can be very, very, very nice. Like for example, you can trade a day, you can take daily or a bigger time frame, like for example, yeah, let's say for example we have daily, right? And in this case we can see that our values, for example, for today, we're not being broke, we've been there, but like again, today looks like, for example, until now, we've been in the 5 to 10% situation where we are not going to break any candle. But let's imagine, for example, these are going to be the value for tomorrow. So based on this value that we are going to have for tomorrow, so in this case, the lower side, because we have a bear candle, is going to be the 65% is going to be on the low version of the previous candle. So you can use a higher time frame, so we get the values because we know it's going to be around 60 something. But then with a smaller time frame, like for example with 1 hour, we can input the trade. So like for example, imagine you are here, so you would input with this one the trade. So in this case, you know, that's another way that you would be able to use it. But yeah, you know, I do believe I'm telling you it's a very, very powerful formula, this one, and it seems very, very accurate. Like I said, it had that margin of confidence around 65%, so it's pretty damn good. So yeah, I would recommend you to look into it and to start testing it, and if you have any questions, please let me know. So thank you and see you next time. Bye bye.